Next, we have Mona Edick, and she is a mortgage loan originator with W.J. Bradley Mortgage Capital, and she has over 14 years of experience in the mortgage business. And one of the things that I wanted to ask you about, Mona, is that I realized that in today's market there's no longer any stated income products, and that used to be a product that self-employed people could use to finance their homes. And now that that's gone, what do people do now? What are you seeing for self-employed people, business owners, and things like that?
Well, definitely for some of them, buying a home on their own is not an option. With self-employed borrowers, there's some planning that needs to go into place. If they're interested in buying a home, they need to get their tax returns together and meet with a mortgage loan officer so we can do a full income calculation. And what that income calculation does is it allows us to add back in some of the items that they may have written off and get a true idea of where their income is. Then there's the option to do some planning and prepare for their next year's tax returns, maybe amend their returns, or perhaps bring in a co-signer.
So it sounds like it's not like I can go out and look at homes and expect to buy one in a month or two. This is a longer term process to be prepared.
Yeah, you definitely need to do some digging into the income right away. And I mean, if their income's great and they can do it, they've made enough money and they showed enough money, then they can move forward right away. But in most cases, people are taking as many write-offs as they can.
Well, that was just what I was going to say, is that I see a lot more of my clients where they're self-employed, and then they're, like they naturally should, take advantage of as many of the tax avoidance procedures as they possibly can. And then it comes down to where, okay, I'm ready to buy a house, and you say, well, I'll make this many dollars, and the bank says, no, you don't. It's actually it's a battle. And so if I'm a self-employed individual like I am, I mean, what can you do to get yourself prepared? I mean, what are some of the the steps, like, as we go? Is it paying yourself a salary? Is it what are the things that you're looking for? Because obviously there's a lot of people out there that are mortgageable, or are qualified. Yeah, exactly. So they just, how do you get them there?
Well, paying yourself a salary is definitely a good idea. It's not always an option for the self-employed borrowers. But even with being paid a salary, if you take write-offs that exceed your salary, that's going to hit your income still. So the best thing to do when you're self-employed is to just prepare. Don't wait until 3 months before you want to be in that house. Go talk to a mortgage loan officer, develop a plan. Like I said, perhaps amending some of your write-offs. You're going to end up probably paying some money in, or amending those returns, but somehow making it work where your income is going to show enough to buy.
Well, Mona, this is Jeff again, and we were talking earlier. Not everybody has the luxury of planning and so forth. Are there some other options? You talked about things to me like co-signers and things like that. Let's talk a little bit about that. Could a self-employed person bring in a co-signer?
Yeah, there's all kinds of situations. You can bring in a co-signer if you have a family member, or someone. Doesn't even have to necessarily be a family member. They just can't be interested in the property. You can bring in the co-signer, or if you're married and your spouse works, we can do some things where maybe we put the auto loan, which is a little easier loan to obtain, in the self-employed borrower's name, and gear up the one who's an income earner, W-2, gear them up to be prepared to buy the home, or bring in that co-signer.
Does that kind of limit the mortgage products you have available then, if they're if they have a co-signer? Or?
For the non-occupant co-borrower, you can do conventional or FHA. A lot of people think it's just FHA, but you can purchase a conventional with a conventional loan with a non-occupant co-borrower.